Let's talk about Robinhood, stock symbol HOOD. Stock had some huge news today, shoots up over 12% on news that they're able to essentially open their doors to an entire continent of new customers using stock tokens to be able to gain exposure to US stocks and also private companies like OpenAI, SpaceX. Really cool news for the company. And so what I want to do in this video is go over the chart. Is it too late to really get in at this point? Are you better off waiting for a pullback? Is it essentially you're FOMOing into the stock at these levels? What's the deal? We're going to get into all of that right now. So I actually own this stock. I have it in my long-term account, bought it back in 2022, back at $9.16. Yeah, kind of a crazy one for me. It's I guess it's up like 900% or so. I've sold some of it, but I hold a large chunk of that position still and just continuing to let it ride. I don't have any intentions of selling it, but I would say this, not really interested in buying it at $93.63 where it closed at, or $96 where it's trading in the after hours at. I think that's getting a little bit high. Definitely considering the fact that it soared over 41% in the month of June, could see where it could pull back some. And so I think one of the things that we have to do as traders and as investors is not to get too rah-rah about the stock, not to get too caught up in the hopium, to be still realistic. Enjoy it, the fact that the stock's going up by, hundreds of, not almost 1,000% at this point, but still being realistic, knowing that, okay, yeah, it might have soared to incredible levels since it went below 30 back in April of just this year, and now it's trading in the 90s. That's quite the run. Probably would make sense if it did have some kind of a pullback in the short term. So let's go ahead and look at the chart right now. This whole thing started really with this huge basing pattern that goes all the way back to 2022. And so you essentially were trading sideways for a couple of years, and then it finally broke out back in early 2024. I remember owning this stock, and it really didn't do anything for me. For a lot of time, I was underwater on the stock. But then it finally broke out, came back down, retested it again in 2024, not even a year ago. And then it goes from about $15 all the way up to 68, pulls back down to 30. This is a wild stock. And it goes all the way up to $93 in just a few months. So incredible run, way overbought. Definitely not one that I would buy here. And here's a couple more reasons for it too. The trend line on this continues to steepen, which means that the excitement behind this stock continues to increase as well. But at this point, it's becoming a very crowded retail trade, especially when you're seeing these kinds of volume levels just pouring into this stock. It's becoming crowded well in advance of the move that's already taken place. So this trend line here, this white line, you could say that that's the trend line to watch, but I would probably consider this whole area here a little bit of an outlier from the April sell-off because it recovered so quickly. This is probably more of the accurate trend line that it's following going forward. Slightly above the 200-day moving average, well below the 50-day moving average. But if you were to get another dramatic pullback, kind of like what we saw in February, that led us into March and then ultimately into April, what you could see is a pullback that does come back down to this like $49, $50 level. I'm not saying that's going to happen overnight. And if it happens, it's going to require probably some assistance from the market selling off as well. And so far, the market's not selling off. It's still trading at all-time highs and really not slowing down one bit just yet. And we're going into the most bullish month of the year. So could Robinhood continue to soar higher? Yeah, it could be at $150. Who knows by the end of this month, especially if you get that crowd fueling that euphoria that it's currently experiencing. So it's kind of crazy. I don't necessarily see it staying in the place where it's at right now or consolidating. I think it's going to be a big swing either way. I could honestly see at the end of July where this stock is trading because of how much the retail crowd is jumping into the stock. I could easily see this thing trading north of 150. I could also see it pulling back if there's a major shock of news or events that takes place in the market. I could see it pulling back down to this $50, $60 level. So I think that the range in the stock is incredibly large. Now, for me, I'm going to kind of like, I'm in my ride or die position in this one. I'm up well enough to where I'm playing with house money, well more than house money. And so I'm not too worried about the stock or really what it might do to me in the long run because it's already up as much as it is. So overhead, you could see some resistance start to kick in here. This is probably the only resistance level that I'm seeing on the stock right now, but you go all the way back to July of last year, you can see where there's some resistance in February And then right now it's pushing it right up against it. Now, the good thing, because it's rising resistance, it could essentially just ride the underside of this. But I don't think that's going to be the case. I think there's so much volatility that even as steep as this line is, I don't think it's steep enough, because I could easily see it breaking right through it if that hopium continues to flood into the stock. You also have some resistance right here that could come into play. Okay, that's right there. And that takes into account the highs back in March, April of 2024, also the highs from July of last year. And then you take this rising trend line right here as well. This goes all the way back to late 2023, right about there. So this is like worst case scenario. I don't see that happening anytime soon. It would have to be an absolute collapse in the short term for that to happen. You'd have to have tariffs come back in full swing. You'd probably have to have some geopolitical shocks, and you'd probably have to have some really bad news come and hit Hood, where it really hurts, because right now they've got the news, they've got the revenue expansion taking place, and they've got a lot of good prospects going forward for increasing their earnings. So with the resistance overhead, I don't see this as being a major issue for it, even though it's incredibly steep. I still think it's very much possible that it breaks through it. Don't get me wrong. I think this thing's way overbought. I just also have seen what the meme crowd and the retail crowd will do with a stock when they get just completely sold out to a stock. They can rally these things to incredible heights. Then you got this white line here. That's probably the middle ground for the stock going forward, where, if there was a major market shift and there was a pullback in Hood, yeah, I could see where it could come back down into this $50 range. But that's going to take a lot of areas of weakness beyond Hood in order for it to do that. So I can understand why a lot of people probably feel like they're missing out. I've never been one to say, hey, look, this stock is up, 300% since April. This is a good time to want to jump into it. I think that's just crazy talk at this point. Considering how much it's run, I would rather wait for it to pull back some and maybe use something like a Fibonacci retracement, like a 38.2% retracement, and say, hey, if it comes back to this level, that is where I'm going to go ahead and buy it. But to buy it here in the 90s doesn't make a lot of sense to me. It makes much more sense if it starts to drop back into the 70s or 60s, to where, okay, at least you've pulled back some. You might be exasperating the sellers at that point and being able to set yourself up for a decent bounce. But it's very difficult to trace these stocks after it becomes very obvious that you missed out on a major move. Now, I'm not criticizing you for missing out on major moves. I miss out on major moves all the time. It's not a big deal. There's always other major moves to be able to capitalize on going forward. So if you missed out on this one, it's not the end of the world. I'd probably wait for some other opportunities. Who knows? Maybe BULL, like Webull. That maybe this one eventually pops. It was up 10% today. I don't think that they have the same following as Robinhood, but there's potential there as well. However, on Robinhood, I think the ship has probably sailed on this one. It's got a $73 billion market cap. When you compare that to like the likes of Schwab, which has $163 billion, I think it's getting a little bit to where it's priced for perfection. You take a look at like Fidelity, for instance, FIS. This one has a market cap of $42 billion, so it's trading at almost 2x of Fidelity. And then you start to get into like the big banks, like Bank of America. Bank of America is trading at $354 billion. So yes, it's nowhere close to Bank of America. But if you start to get to where it's like in $200 or $300 range, yeah, you're going to be getting close to being in Bank of America's range there. So I don't necessarily think that you're getting into a stock at these levels that provides a good opportunity from a long-term investment. If you enjoyed this video, and I hope you did, please make sure to like and subscribe to my channel, and let me know down in the comments below, what is your take with HOOD? Are you still holding shares of this company? Where did you buy in at? I would love to hear where you bought in at. Also, make sure to check out the Self-Made Trader. That's my flagship course on shareplanner.com. Thank you guys, and God bless.